Yes, so let's start with the second B lecture where we are going to start with the PGBP chapter. PGBP chapter is a profits or gains from business or profession. As the name suggests, profits and gains from business or profession. Either you are running a business or you are running a profession. Whatever you are earning, whatever profits or gains that you are arising, that will be taxed under the head PGBP. Now, what is PGBP is? See, as I have said in the first lecture that the government of India has under section 4, the chargeability of income tax said the total income word, which I have described that gross total income less deduction will be the total income of every person will be taxed at the rate specified in the general or finance general rate that will be given in the finance act and the specific rate that are given in the income tax act. Okay, so with the word was the total income that I described that total income. See, total income is equal to gross total income less deductions under chapter 6a. Under chapter 6a. Is this clear? Now what we have said that this gross total income is the summation of few things. Summation of few things. What are those summations? See, the government has divided your income in five heads. In five heads. The government has divided your income in five heads. That whatever income that you are earning will be classified either in this head, either in that head, or that head. Then this have been classified under five heads. First head is salary. Second head is house property. Third head is PGBP, which is our main focus point of this chapter. Okay, then there will be a capital gains. That is short. In short, it's CG, capital gains, and the other sources. The leftover all the points will be covered in the left covered under the last point of the other sources. Is this point clear? So the gross total income is divided into five heads of income. First is the salary income. If you are a salary employed, if you are employed, then your income will be taxed under the head salary. Okay, house property will, if you are earning rental income, then those rental income will be taxed under the head house property. If you are running a business or a profession, then any income or gain or profits or gains that you are arising from those business or the profession will be taxed under the head PGP. Or if you have some land or building, or if you have sold that land or building, then it will be come under the capital gain. If you have some capital asset, if there is some capital asset, and if you transfer those capital asset, and on those transfer, if you arise any gain, that will be taxed under the capital gain, and each and everything apart from these four heads will be taxable under which head? The other sources head. Okay, so well, I can say that salary income will be taxable under this head only. See, this is what I have explained. But to tax if the government want to tax your salary income, then they must describe something. What is the eligibility criteria that an individual is earning a salary income, then it will be taxable under salary head. This line it should be written somewhere. Okay, this line should be written somewhere. This line is called the charging section. As the Income Tax Act charging section was section 4, where it was written that the total income of every person will be taxed at the rate specified. So same way, there should be a charging section of all these heads. Of all these heads, there should be a charging section so that we can know that this particular income will come under this head. Okay, as I can say, I am an employed person, I am earning salary, then I will be taxable under head salary. This should be written under the head salary itself. Okay, if I am earning some rental incomes, that rental income should be taxed under house property head, then it should be written under house property head. Okay, so each and every head should have their own charging section. So apart from this, we are not talking about these things as of now. We are not talking, we are not even interested in these points. These two heads are also not even included in your CA final syllabus, because you have already studied those things in your CA intermediate in full details. Okay, some of the things will come time by time in your exams, in the question itself, that will be very manageable, and we'll solve those part as well. Okay, but currently what we are focusing on, not on capital gain, not on other sources, but we are focused on PGBP. And the PGBP, the charging section, what we are concentrating on, the charging section, which attracts, which charge something, that if you are earning, if the assessee is earning this income, if the assessee is having that much income, or this income, then these all income will be taxable under the head PGBP. This is what the charging section says. Okay, so the charging section of the PGBP is the section number 28, is what the section number 28. So whatever income that is written under section 28, that will explicitly, that will explicitly be taxed under the head PGBP, and not other any other head. Is this point clear? Okay, we are not focusing on salary, we are not focusing on HP, we are not focusing on capital gain, or we are not focusing on other sources as of now, but we are focusing on PGBP, and this is the main important head for your CA final examination. Your question number one will definitely be coming from PGBP only. The 14 mark question will be from the PGBP part. Is this clear? So this question itself becomes very important, and PGBP may also, ICA may also ask the PGBP in the question number 2 or the 3 as well, including the MCQs. So on an average, you can say the PGBP is having 15 to 18 marks of the weightage. At least 15 to 18 marks of the weightage the PGBP is carrying out of the 100 marks paper that you will going to solve in your examinations. Is this point clear? So this chapter becomes very ultra important for you to read, and read very carefully. Okay, solve each and everything of this chapter. Okay, write each and everything of this chapter. I'll also try that I'll write as much as possible for with you. Okay, because it is going to be very important chapter for your examinations. And the first question, the compulsory question is, if it comes from the PGVP, then you must master that question, because if first question goes good, then your whole paper goes good. But if you do not know how to solve the question number one, if you leave that chapter, then it will be very 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 problematic for you, that you already given 14 marks to the examiner that I am not going to attempt. Okay, so that will be very suicidal point. So I do not request, or sorry, I do not say that you will cover this chapter on just by overview, but complete this chapter in full detail. By how many hours it take doesn't matter, just complete this chapter with full details. Is this point clear? By this note, I am going to start the PGVP chapter. Okay, now the PGVP chapter says that the charging section of this chapter is 28. Usually the PGVP chapter goes from section number 28 to section number 44. Okay, the inside sections are different, but the section range is from 28 to 44. By this range the PGBP chapter covers. Okay, now coming on to the point. See, PGBP chapter, profits and gains of business or profession. The first section is what? Chargeability. What incomes will be chargeable under this head? If then assessee is earning these incomes, then it will definitely be taxed under the head PGBP. I hope it is clear. Okay, now the following income shall be chargeable to tax under this head. See, there are two words. See, there are two words. I am going to also teach how to read law, not for the purpose of only the examination clearance, but that will be secondary. But you should even also know how to read laws in the practical life. As you are going to become a chartered accountant, you will definitely be dealing with all these act in your regular life. So for that purpose, you must know how to read the law. So following income shall be, what is the word? The word is shall. There are two words. May and shall. There are two words, may or shall. See, may is like an optional nature. It has an optional nature that the word may has been used by the law, then it is on option, it is on your choice that whether you want to opt this or you do not want to opt this is completely your choice whether you follow this or you should not follow this. But where the word mandatory, where the law wants to say mandatorily, definitely you have to come under this point only, you have to opt this only, then they use the word shall. So the shall word has a mandatory charge. What has a mandatory charge? Okay, it has a mandatory charge. See, so what the government is saying, the government is saying the following incomes, whatever we are quoting here, shall be definitely 100% mandatorily be chargeable to tax under this head. What is the head? This head is the PGBP. So whatever we are quoting here will be definitely going to be charged under the head PGBP and not other any other head. Okay, like salary, other sources, house property or the capital gain, these income are not going to tax in any other head but only in the PGBP. I hope it is clear. First line is clear. Now to the second. See, first point is the very generic point. What it says that the profits and gains of any business or profession, if you are running any business or profession and earning any profits and gain which was carried on at any time during the previous year, if you have earned any income during the previous year by running a business or a profession and earning any income, earning any profits or gain from that business and profession, that will going to be charged under the head PGPP. This is the very generic section. Okay, this is the generic section, but afterwards it is going to be very specific. So first thing, what is the general point? The general point is that the profits and gains from any business or the profession which was carried on at any time. See the what it is saying. It is saying on at any time, anytime. Okay, at any time of any business or profession. There are two important words to take care of. Okay, what it says, profits or gains, any business, whatever business you do, we do not care. The laws clearly said whatever business you do, we do not care whether it is legal business, whether it is illegal business, we do not care. You are doing a business or profession, you are running a business or profession and earning profits and gains, that's it. We do not care whether it is a legal or illegal. If it is illegal, then there are the criminal proceedings and other proceedings that will happen and go on. That we are not uh, we are not concerned about that point. But what we are concerned about is profits or gain of any business or profession, whatever business you are running, whether legal, whether illegal, the profits and gains if you are earning from that business, it is going to be taxed under the head PGPP only. So your illegal business, illegal income is also going to get taxed. The government gets to know that it is an illegal business and they gets to know that you have earned some profits or gain from that business or profession which was carried on any time, like for one day only. In the previous year you have opened a business, okay, for one day only and earn some profits or gain from that business, that is also going to be taxed in the PGBP. So what, so the government does not define anything like the business is to be run for whole the year or at least for 6 months or 5 months. No, at least for one day. If you are running a business for one day, 1 hour, 1 minute, does not matter. If it is a business and you are earning profits and gains from that business, then definitely it is going to be taxed under the head PGBP. I hope it is clear. It is clear. Okay. Now coming to the second point. Now all this point is going to be very specific. What it says? It says export incentive, which includes. Now the word includes. Now we also need to learn what includes means. See, now come here. There are word includes and second is means. There are two words in the laws. First is includes, second is means. Now what does it actually refer to? Includes means what we are quoting is included, but may also include any other things. So we are not giving you the exhaustive list of the of these points, but it is going to be the similar nature. Okay, if there is any other income that you are earning, but which is it is not written under these 3 points. Suppose the law says includes. Okay, so the export incentive 1, 2, 3. The government said there are three export incentives which we are including. But suppose if there is any other export incentive, if there is any other export incentive which is not this and this, but there is any fourth category of export incentive, whether the government of India is going to can tax those income. Yes, they can tax those income as well, because the government of India quoted that export incentive which includes. So whatever list we are giving is not exhaustive. We can also include any other thing which is a export incentive nature. Any other thing of the export incentive nature, we can also include that. So the word includes means it is not an exhaustive list. It can also include any other thing. But the government uses word means. If the government uses the word means that that's close, full stop. If these three things are written, then only these three things can come here. Any of the similar nature thing will not going to include here. Okay, so means are the thing that is going to put the full stop on the list, that nothing can edit in this list. It is the exhaustive list. Only these 3 points can come under the export incentive and nothing else. But here what the word it includes is written. The word includes is written. If the word includes is written, then apart from these 3 points, any other point can also be incorporated under the point number 2. I hope it is clear. Okay, so we have learned till now what shall or may, includes or means. These are the very important words for the law understanding. Now, what are export incentives? Now we come to the points. It says that profits on sale of import entitlement license. Oh, what does it means? We do not know what is import entitlement license. Okay, moving ahead, cash assistance received or receivable against the export. Okay. Duty drawback of customs and excise, central excise duties. Oh, whatever it is written, we do not understand anything. What these words are written, it is like a French for us. The import entitlement license, assistance received, duty drawback might have been, we might have listened to these words, but import entitlement license, cash assistance received. These are like the French for us or the German for us. So let us understand these things very easily. See, see, come to the point. Section 28, chargeability. You have to write each and everything along with me, because you will not get any other extra time to revise things, or to or if you revise afterwards, or you write each and everything afterwards after the class, then you will not have the sufficient time to make 2 or 3 revisions along with the mock test. That will be very harsh situation for you. So okay, so you have to write each and everything along with me itself in the class. Okay, so what chargeability means? We are talking about point number 2, export incentive. It says there is any export incentives, then we are going to tax it in the head of PGBP. Now, export incentives. Suppose Mr. A. Okay, Mr. A is exporting. Mr. A is exporting what? Suppose a machinery is specialized. Let me say it is a defense specialized. Okay, Mr. A is exporting a machinery, defense specialized machinery, or let me say it is not Mr. A, ABC Limited. There is a company. There is a company ABC Limited is exporting a machinery that is a defense specialized, that is specialized for the our defense needs. Okay, okay. Then exporting to which country? Suppose United States of America. Exported to which? United States of America. Now, for exporting a machinery, defense specialized machinery, we might need some imports. We might need some parts of that machinery that may be imported from any other country, and we will assemble it in our India and make it make in India stamp and send to and export to whom? The USA. We need that. Okay. So for that, suppose for that, there is a country, France. Okay. From France, suppose Mr. Sorry, ABC Limited imported some spare parts, or some engines. Suppose some engines, anything imported. Okay. So for exporting the machinery to the USA, France, ABC Limited has imported something, some parts or the engines from France. Okay, but now this contract, see, this contract, exporting of the contract from ABC Limited to USA is going to be for the benefit of the India and USA relationships. Is going for the benefits of the India and US defense relationships. Okay, so for that, what government of India is saying? Government of India is saying that if you are exporting these defense specialized things, okay, which USA is needed from India, you are if you are exporting these defense specialized things, and for purpose, if you need any spare parts or if you need any engines from France, then we will give you the benefit of those imports. Okay, we will give you the import incentives that you can import it. We will not charge you the customs. We will not take custom duties, or we will give some benefits to you. So for importing these things, we get some benefit because we were exporting something. So to export something, we get some import incentives. Okay, for to import our spare parts or the engine, we get some import incentives. So that is what it is written, that import entitlement license. As of now, just read this much: import entitlement license. That I got a license from the government of India. I got the license from the government of India to import that spare part or the engines from France. This is the import entitlement license. Okay, because there may be some, suppose there may be some hazardous parts that can be used for a war. Okay, that can be used for a war. Okay, spare parts or engines. I am taking the example of a defense specialized, but there can be any other thing, any other export machinery exporting. For that we need any parts. For that we might that can be used for the war purpose. So the government of India is giving specific license to those only who need them for exporting a machinery. Okay, it is not a general license. You cannot import those spare parts of the engines generally in India. But for exporting that thing, for the defense specialized thing, the government of India specifically given the ABC Limited what? A import entitlement license, that you can import this particular parts from France in India to export to USA by making a machinery. Okay, this is what import entitlement license. Now suppose ABC Limited got this import entitlement license. But as of now, for this year, suppose ABC Limited is not going to export anything to USA. Suppose ABC Limited is not going to use that import entitlement license for this year because he does not have any orders from USA for any machinery, the defense specialized machinery. Okay, so he has the import entitlement license with him. He have the import entitlement license. He had this, but it is of no use for ABC Limited. So what ABC Limited do? ABC Limited find any other company. Suppose it finds whom? It finds XYZ Limited. XYZ Limited of India. Now XYZ Limited have the orders of exporting a machinery to USA of the defense specialized. And for that purpose, He need that spare part or engine to be imported in India. For that, he does not have the import entitlement license. XYZ Limited does not have the import entitlement license. The import entitlement license was only with the ABC Limited. So XYZ approached ABC Limited. Okay, it approached ABC Limited to give import entitlement license so that he can import some spare parts or engines from France. So for that purpose, ABC Limited transferred the import entitlement license to whom? XYZ Limited. And for that, by transferring the import entitlement license, for that he ABC Limited charged something. ABC Limited charged something. Suppose it charged 5 CR. Suppose it charged 5 CR rupees. So it is a gain that ABC Limited earned from the export incentive. Government want to export this thing. Government want to export this specialized defense specialized to USA. But for that purpose, we need to import something. And for that, the government give the import entitlement license. But ABC does not have the need for that import entitlement license for this year. So he transferred it to XYZ Limited. And for that, ABC Limited charge suppose 5 CR for that import entitlement license. So that 5 CR that ABC Limited earned by transferring what? Import entitlement license will be taxable under which head? Will be taxable under the head PGBP, that is written under the point number 2. Export incentive, which includes profit on sale of import entitlement license. I hope at this point is very much clear. Import entitlement license is clear. Is this clear point? Correct. And now moving ahead. Cash assistance received or receivable against exports. See, suppose may the government can say that for exporting this thing, you export this. If for exporting this thing, we will give you some cash assistance. Okay, for suppose the project is to be exported, and for project there is a cost of 100 CR rupees. Okay, 100 crore rupees will be the cost of that project. So the government is saying, okay, if it is a 100 crore rupees cost, then we will give you 20 crore or 30 crore rupees as a cash assistance so that you can make that product and export it to that country. So for because we want to increase the export of that particular good, the India wants to increase the export of that particular good across the country, across the world. So for that we are giving you some cash assistance. Our ministry will give you some cash assistance. For that, if any of such cash assistance is received from the government of India for making the export, that is also taxable in the head PGBP. Okay, this is what said cash assistance received or receivable. Either you have received or the government has promised you to give that cash assistance, so it is accrued to you, so it will be receivable for you. So either you have received it or it is receivable for you. In both the cases, it is going to tax under the PGBP head only. Okay, against export for export purpose. Okay, this point is also clear. So till now what we have covered 3 points. Profits and gains of any business or profession which was carried on at any time during the previous year, at any time of any business. Okay, then export incentive includes, this is not the exhaustive list, it is the inclusive list. Okay, what it says that profit on sale of import entitlement license. Second is cash assistance received or receivable. The word receivable is important. The word receivable is important. You have to remember this. Now some duty drawbacks of customs. What is this duty drawbacks? The government may take some duties. Government is taking some duties on the imports things. As you know that if you want to export something, or if you want to import something, then government can use the custom power and apply some taxes to you. Okay, but for that duties that government is going to tax you, the duties for export purposes. Suppose for export purposes the government wants to increase the export of that, so the government want to increase the tax of a certain product, so what will happen? Mr. ABC, suppose Mr. ABC is exporting something to the USA. Now the government has given them what? Import entitlement license. Government has given what? Cash assistance also. But when you are going to export something, at the port of this export, the seaport, there is a custom officer. Custom officer says, I do not care, you have a import entitlement license. Okay, oh, good. You have a cash assistance by the government. What does I care? How does I care all these things? But I need the duty. You are going to export something and you are going to import something. So I need duty for that. So as per the law, the custom officer is required to collect the duty on the import and export things. So for that, you have to give some duty to that custom officer to export or import something. Okay, this duty is to be given. But government wants what? Government want to increase the export. So for that, what government is doing? Government is doing whatever duty that you have paid to the custom officer, we will give you that back. So it is what? Duty drawbacks, that your duty will be given back to you as you are going to export something and we want to increase that export. So for that export, we are giving you some incentive, that is a duty drawback of customs or a central excise duties. Okay, so all these 3 points are covered to are easily understandable by you. Now what is the first point is export incentive, which includes the import entitlement license. Okay, cash assistance received or receivable against export. Or third point is duty drawbacks on customs and central excise duties. So 2 points, starting 2 points is clear to you. I hope it is very much clear. Correct. Moving ahead, what it says? It says value of any benefits or perquisites arising from any business or profession. Okay, what it says, see, value of any benefit or perquisites arising from any business or profession, whether convertible into money or not, or in cash or in kind, or in partly in cash or partly in kind. What does it means? Let us understand this. Now, what does it means? See, value of any benefit or perquisites. What it says, benefit or perquisites arising from any business or profession, whether convertible into money or not, or it's in cash or in kind, or partly in cash or partly in kind. What does it say? See, suppose there is. Let me show. Let me make it for you. The point number three. Suppose there is a company called XYZ Limited. Okay, this is a company. Suppose it is an insurance company, or let us say it is a LIC. Okay, Life Insurance Corporation of India, LIC. It has some commission agents as well who brings some life insurance for those for that company and get some commission. So suppose there is a Mr. Weber who is a agent, who is the agent, insurance agent for the LIC. Okay, so Mr. Weber give life insurance policies to LICs, and LIC will give what? Give the commission. Give what? Give the commission. So Mr. Weber is also running a business of doing the LICs or the life insurance policy on behalf of the LIC. Okay, and earning what? Commission. Okay, if it is a business for those that person, that Mr. Weber, then it will be taxable under the head PGBP. Okay, under the first point only. Now, what is the problem? Now the problem is that, just a second. Now, suppose along with commission, life insurance policy, Life Insurance Corporation of India, LIC, says to Mr. Weber that if you complete the target of rupees, if you complete the target of rupees, suppose 50 lakh of premium, then we will give you a Goa tour with family. The government, the LIC does not also want that you go you go to Goa along without your family, they also keep that track and give you the offer with family only. Okay, so you can't have any fun. So if you complete the target of 50 lakh rupees premium, Mr. Weber covers the target of 50 lakh rupees and deposited the premium of rupees 50 lakh rupees, then the LIC will give you the tour Goa tour package with family. Okay. Now, Mr. Weber just did his best and completed the target of 50 lakh rupees premium, and just and intimated the LIC that I have completed the 50 lakh rupees target within the stipulated time that you have given. Now give me the Goa tour package. So for Mr. Weber, it is the benefit of perquisites. It is a perquisite of benefit that arising from the business. What he is doing the business? He is doing the business of selling the life insurance policies. So from that business, if he is if he is arriving any other benefit or perquisites, this is what? This is the benefit oblique perquisite arising from business or profession, because it is doing the business of life insurance policies, and because of that business, by doing the life insurance policies, I am getting some benefit of perquisite. So what the government said? The government said, okay, no issues. If you are earning any benefits of perquisites in relation to your business or profession, in relation to your business or profession, then it will be taxable under the head PGBP. But there is a problem. Mr. Webber is saying, "Oh, I have completed the 50 lakh rupees of target. Now the insurance, life insurance, giving me the Goa tour with family. Suppose of 4 days, 3 nights. Okay, 4 days and 3 nights. The package was given by the LIC to me with family of Goa. Okay, good. But how will I calculate it? What is the value of that perquisite? What is the value of that benefit? How can I calculate it? There was a problem, because the Mr. Weber can say na that it is not going to convert in cash, it is in kind. Goa tour, the benefit which is given by the company, it is in kind. So I do not have the value. So how can you take tax from me? So the government of India said, okay, no problem. Whether you have received in cash, whether you have received in kind, whether it is convertible into money or not, we does not care. Goa tour cannot be converted into money. You cannot sell it to any other person. Goa tour is going to Goa tour is given to you only, then you have to go with your family. Goa tour cannot be converted into money. It is not a hard cash benefit that you have arising from the business or profession. So it is not convertible into money, and it is not in the cash as well. It is in the kind format. So the government of India says that whether it is convertible into money or not, we do not care. Whether it is kind, whether it is in cash, whether it is in both kind or in cash. Suppose it says that we will give you 20,000 extra along with the Goa tour. So 20,000 is partly cash, and the benefit of again the Goa tour is the partly kind. So there can be any permutation combination, whether it will be convertible into money or whether it is not convertible into money. Okay, or it is either in cash, either in kind, either partly in cash or partly in kind, does not matter. Whatever the value of the Goa tour, how can we calculate the value of Goa tour? Whatever cost to the LIC, whatever cost is beared by the LIC for giving that Goa tour to you with the family, that amount will be taxable to you as well under the head PGBP. I hope it is clear. This is what the question point number 3 is saying. Value of any benefit or perquisite arising from any business or profession. The benefit or perquisite must arise from business or profession. If let's think. If it is arising from in conjunction to your salary, under the salary and under the intermediate, you have studied the perquisites na, that the company is giving you the car from coming here and there. Company is giving you the house rent allowance, sorry, perquisites, the rent perquisites. Okay, the home, they are giving you the home or the room for that purpose. The company is giving various perquisites for your salary in relation to your employment. If the benefit or perquisite is in relation to your employment, then it will not going to tax under the head PGBP. It will go under the head salary, but only when the benefit of perquisites arising from business or profession, then only it is going to tax under the head PGBP. Now, whether convertible into money or not, we do not care, or in cash, in kind, partly in cash, partly in kind, we do not care. Whatever the amount of whatever the thing is received by you in kind, convert it into money on the basis what is the value beared by the giver of that benefit or perquisite. That will be the value of the fair market value, and you have to give tax on that fair market value. Is this point clear? Is this point clear? Now come on to the next point. What it says, it says that any interest, salary, bonus, commission, or remuneration of a partner from his firm. Any interest, salary, bonus, commission, remuneration of a partner from his firm. So, suppose, so simple, if a firm is giving anything, if the firm is giving any money to the partner in any form, form, whether it is interest, salary, bonus, commission, remuneration, in any form, why whatever name called, if the firm is giving some benefit to the partner by interest, salary, bonus, commission, remuneration, it is going to be taxed in test head only, the PGBP, because there is no employer-employee relationship between the partner and the firm. Who is the employer? Who is the employee? Partner and firm are the both the same thing. So here as well, it does not go to the salary part. The salary, if you are also giving, na, it is not a salary. It will not going to charge under the salary head, because there is no employer-employee relationship. Because if you have studied, to charge anything under the salary head, there is a charging section, and charging section says what, there must be a employer-employee relationship. But under the partner or the firm, there is no employer-employee relationship. That is why anything which is received by a partner from the firm will be taxed under the head PGBP only, but up to the certain extent. What is a certain extent? Certain extent is given to the there are certain limits that is given under the section 40B. Till that respective limit only, that will be taxable under the head PGB. I hope it is clear. I hope it is clear. Now, I have said by whatever name called, say, interest, salary, bonus, commission, remuneration of a partner. I have not said profit. Profit received by partner from his firm, not written here. Why it is not written here? You will get to know in the later part of the chapter, but I think might you have listened to this point earlier as well, or in your articleship, that there is a section called 10 to A. 10 to A. There is a section which says that profit or from firm to her partner, profit that is received by a partner from his firm is exempt to the partner, because it is taxed into the head for because it is taxed in the hands of firm itself. So the profit is exempt in the hands of partner because of section 10 to A. That is why the word profit is not written here. I hope it is clear. This point is clear. Okay, now coming on to the point, next point, we will study these 2 points only, then this point will be studied by tomorrow. Okay, because it will take time. Now, income income derived by a trade professional, by a trade professional or similar or association from specific services performed for its members. What it says, income derived by a trade professional or similar association from specific services performed for its members. Now suppose, what is the point? Point number 5. Point number 5 says that suppose Mr. Weber, okay, Mr. Weber, and there is a suppose company XYZ Limited. Now, what it is there, that suppose XYZ Limited files a case against Mr. Weber, case filed, and it is a strong case. Suppose it is a strong case in favor of XYZ Limited. Okay, it is a strong case in favor of whom? XYZ Limited. Now Mr. Webber is very concerned. If he does not get a good or the best lawyer, then he is going to lose the case and is going to penalize very heavily. So Mr. Weber thought that to go for a very good and the renowned lawyer. Suppose who is a lawyer, the main or the renowned lawyer? Name them. Suppose Ram Jethmalani ji. Okay. Mr. Weber wants to appoint Mr. Ram Jethmalani, the advocate, to fight his case against the XYZ Limited in the Supreme Court. Okay. Now I approached, Mr. Weber approached Mr. Ram Jethmalani. I gone to his office and his peon just said, just sir cannot meet you. Peon threw me out of his office and said, sir can't meet those type of people like you. Like, what I can say on these things? I do not get even an appointment to defend my case against the XYZ Limited. Now, if I'm going to any other lawyer, the local lawyer, then I'm going to definitely going to lose my case. I just want to, I just want that Mr. Ram Jethmalani can fight this case, and if he fight this case, then definitely the case can turn into my favor. Understanding this? Now, I am a member of, suppose I am a member of some club, some association. I am a member of an association. Now, member, who is a member? Mr. Weber. It is an association, and it is very known association. It is a very known association, and for that, Mr. Ram Jethmalani is also very influenced by this association. Okay, he also wants to associate with us with this association, and he also wants to help this association in any manner he can. So, and fortunately, I am the member of Mr. I am the member of this association. Suppose association name is Y association. Suppose Y association is the name. Okay, now what I have done, I have approached the association. I approached the association and said, you are very influential association. Kindly approach Mr. Ram Jethmalani on behalf of me to file my to defense my case against the XYZ Limited in the Supreme Court. Kindly you approach him. Now, Y Limited approached Mr. Ram Jethmalani. Y Association approached Mr. Ram Jethmalani. And Ram Jethmalani happily accepted the case. Ram Jethmalani ji happily accepted the case. Now, Ram Jethmalani ji will definitely going to defend my case against XYZ Limited in the Supreme Court. But for that arrangement, that Mr. Weber gone to the while association, and while association appointed Mr. Ram Jethmalani on behalf of Mr. Weber, so why association charges something? Why association charges, suppose 50 lakh rupees. Why association charges rupees 50 lakh rupees. Now this 50 lakh rupees will be taxed under the head PGBP for the Y association. Is this point clear? 50 lakh rupees is going to tax under the head PGP for the Y association, because of this fifth point. What it says, see what it says: income derived by a trade professional or similar association, anything for from services provided, specific services performed for its members. Important word is what? Members. For its members. That Y association specifically performed some services on behalf of me. That Y association arranged Mr. Ram Jethmalani to defend my case. It has provided, that association has provided what? Specific services for its members, for Mr. Weber. Then those any income that derived, that rupees 50 lakh rupees is going to taxable under the head PGBP, that is chargeable under the head PGBP. I hope it is clear. Income derived by a trade professional or similar association, from a specific services performed for its members. I hope it is clear. Till now it is clear. Now coming to the sixth point, what it says: any sum receivable under a key man insurance policy, including bonus on such policy. Now coming to the point again. Point number six. I hope you are enjoying these lectures and making these notes as well. Okay. Now key insurance policy. What is the key insurance policy? Suppose again there is a company. Suppose company is XYZ Limited. There is a company named XYZ Limited. Okay, and this is Mr. Webber. Okay, Mr. Weber was very important for the XYZ Limited. Okay, because Mr. Weber was the CEO of the XYZ Limited. So it is a very key influential person of XYZ Limited. He's a key person of the XYZ Limited that if Mr. Weber leaves the company, then the company is going to suffer a lot. So that is why Mr. Weber is what? The key person. Key person, key managerial person, KMP in the long term, but I am saying what? Key person. Okay, this is a very important person for XYZ Limited. So to retain Mr. Weber, or to retain Mr. Weber, various kind of perquisites or the benefits was given by XYZ Limited, and one of that perquisite or the benefit was insurance policy. One of that benefit was insurance policy, that is known as the key insurance policy, that a that is the insurance policy of a key person. It is known as a key insurance policy. Okay, now we have given a key insurance policy for Mr. Weber, that if he suffer any accident or if he gone under any health issues or maybe any other thing, there is a life insurance policy or a health insurance policy taken by the XYZ on behalf of Mr. Weber under a key insurance policy guidelines. Okay, so this was the problem, this was it. But now there is a taxability angle. Now suppose the insurance policy is of tenure, the insurance policy tenure is of 10 years. Suppose 10 years. Okay, now there is a three possibilities. We will understand all three possibilities one by one. There is a three possibilities. First policy possibility is that received by Mr. Weber. Received by XYZ Limited. Received by family members of Mr. Weber in case of death. Okay, these are the three possibilities. After the tenure of 10 years, either that policy, insurance policy, can be received by Mr. Weber. Okay, if Mr. Weber receives that insurance policy, if Mr. Weber receives that insurance policy, then for Mr. Weber, it will come under the head salary, because there is an employer-employee relationship between XYZ Limited and Mr. Weber. So any perquisite, that is a perquisite insurance policy, key insurance policy is the perquisite for Mr. Weber, because it is an employer-employer relationship. So salary head comes into play and said that Mr. Weber, you have received an insurance policy. Okay, come and tax and give tax under the head salary. Okay, now suppose before the tenure of the 10 years, before the tenure of the 10 years, or maybe after the 10 years, what happens? Mr. Weber died due to sudden accident or maybe the natural death, anything. So the insurance amount, the insurance policy amount was received by the family members, the legal representative of Mr. Weber. Okay, so if Mr. Weber, legal representative, received this life insurance policy, then it will be taxable under the head of the family member who received the insurance policy amount. But under which head? Under the head other sources. Under the head other sources. Okay, but there is a point. But if that insurance policy is received by XYZ Limited, is received by whom? XYZ Limited itself, then it is the benefit or perquisites arising from business or profession, because it is a perquisite. The insurance policy amount is received by whom? XYZ Limited, because of the business or profession, because we want to retain a key person of our business to run our business very efficiently. For that purpose, for that business purpose, I have received what? XYZ Limited received what? Received the life insurance policy. For that case, it will be come under the head PGBP. It will come under the head PGBP. I hope it is clear. Now, see what is this written? Any sum. Come here. Any sum received under keyman insurance policy, including bonus on such policy. If on the is on the expiry of the life insurance policy, there are some bonuses given by the company. Okay, if that company is if that bonus is also included in that, then bonus is also going to tax here. So, but for that, who will receive that? If the company is going to receive that, then it is going to tax here. But if the Mr. Weber received, then it is going to tax under salary. If the legal representative of Mr. Weber received that, then it is going to tax under the head IFOS, means income from other sources. I hope it is clear. Now the point number 7 is a bit tricky, bit lengthy, and the point number 8 we'll study that in the later part, in the next part of the lecture, in the next lecture, lecture number 3. Okay, till now this is clear. Approximately 1 hour we have just studied the 6 points. Approximately 1 hour. This is how you need to learn the PGBP chapter. This is very logical chapter, but you need to understand the logic and the sequence of the flow. I hope it is very much clear to you all. So let's meet in the next lecture. So now keep revising and ask doubts if you have. Till then, take care and all the very best. Keep studying, and this time we are going to crack the direct taxation exams with exemption. So let's meet in the next lecture.